Hey, you guys, how's it going?
Hello, Jen.
Hello. Well, thank you for joining me. We'll give everybody, a minute to jump on and then we'll go ahead and start.
Hello, everyone. Thanks for coming.
Thank you, Michael. Thanks for joining us.
Hey guys.
Hey, Austin. We might as well just go ahead and start. I want to say hi to everybody and thank you for joining us. I'm Jen and I am your host here. I'm especially excited to have this conversation. The spaces today, we've had it planned for a few weeks now, and the whole idea behind it was thriving beyond the hype and building a sustainable DeFi ecosystem. And it kind of took on this double meaning, right? There's always so much happening in the space and so much happening with our guests, I guess, in particular. And I want to introduce all of you. Michael Kong is joining us. He's the CEO and co-founder of Fantom. I've got Austin here with FTM Alerts and Mark Richardson of Bancor. Thank you guys for joining us.
Yeah,
The
glad
pleasure
to
is
be
always
here.
good.
Looks like we lost Michael. Let's get him back up here with us. Cool. Michael, are you back?
Hello, can you guys hear me?
Yes, I can hear you now.
Yes, we can hear you fine.
Sorry, I think I had some internet
Good.
issues. Apologies.
No, there's always technical issues. It's no worries. I always say better to just get them out of the way in the beginning, right? Hopefully that took care of it. So Michael, I want to start with you. If you would just introduce yourself, tell us a little bit about your background and tell us how you got into crypto.
So kind of got into crypto. Well, first heard about Bitcoin, I think back in 2012, because at the time I was a big fanboy of someone who's quite notorious in the crypto community now called Peter Schiff. And to his to be fair to him though, even though he was obviously like against Bitcoin, basically consistently for the past 10 years, he did have guests on the show that kind of would argue the opposite opinion. And back then, there wasn't Ethereum and a lot of other currencies. So it was mainly talking about Bitcoin. But then the following year, I was talking to more people around me, local, kind of a, shall we say, like libertarian orientation, that were telling me about Bitcoin and all the benefits of it. And I got a lot more interested in understanding it a bit more from their perspective. And, bought a few Bitcoin, but I didn't really get involved on the technical side of things though, because I wasn't really interested in working in the payment space, which I kind of saw is what I saw Bitcoin as at the time. But then in 2015 and 16, a friend of mine at university, he went to work for Coinbase actually afterwards in San Fran. He was telling me about Ethereum, and he was very bullish on Ethereum. There were all the stuff you could do with smart contracts and P2P applications and that sort of thing, and that really got my interest in it. So I started just playing around with smart contracts, getting to know it, understand it with a few other friends of mine as well that still work in the space. And then I was studying at university at the time, finance and IT, and my final year software project plus thesis, I had to do it on something. And there was a professor there that we're working with called Bernard Schultz, who specializes in programming languages and virtual machines, that was already looking into the Ethereum virtual machine and analyzing virtual machine instructions. The objective there was to basically build software that could identify flaws in smart contracts by analyzing virtual machine instructions. So quite technical stuff. And so I did a whole bunch of research with him, with a few other people, some of whom actually like went to become like developers at various different protocols. And there, we built these sort of software tools to analyze these virtual machine instructions, and creating software to find bugs such as reentrancy, out of gas exploits, which is what my thesis was on, and a whole bunch of other stuff. And during that time in my final year in 2017, I also started working at first software engineer for a blockchain company called Block8. They worked on like say synthetic network protocol back when it was known as Haven in 2017, and a few other protocols as well. So they've done pretty well. And then also co-founded one of the first crypto funds in Australia. And then that's how I kind of got involved into Fantom because we were advising on crypto projects, and one of the projects we were advising was this project called Fantom out of Korea, and it ended up getting a lot of hype around it and raised a bit over $40 million. But then we had to kind of like replace a lot of the team there, and I actually owe like a lot of thanks to Andre, because I wanted to quit at the time because of all the nonsense that was going on. But Andre was like, no, let's try and explore different ideas around consensus. Let's try and achieve the original aim of AVFT. And I said, okay, fine, let's build a team, etc. And then the team that we have now of developers and researchers, some of them have been with us almost from the very beginning, and they're the ones that really have built the kind of chain that we have now, that's asynchronous, that processes transactions fast and lower cost than say Ethereum, and has now created this generalized smart contract platform. And so there's a lot of upgrades that the same developers are working on going forward, and I think they've done like a pretty good job so far.
Thank you. You've said two things that really caught my attention. One was you were studying finance, but you weren't really interested in like the payment aspect of Bitcoin. That kind of caught my attention.
So I was interested in like Bitcoin as kind of like a form of money, and I still very much am. It's definitely a very different and better and voluntary system compared to say the fiat currencies out there, which history has shown, going back Roman times, even under a gold standard, whenever there's government controlled money, they will always debase the money supply, because it's kind of like a cheat, right? It's like very sneaky. It's kind of a way to steal the purchasing power of people while pretending that everything is fine, right? By just back in Roman days, it was reducing the amount of like metal in the coins, from gold and silver to something that's cheaper like copper, and just minting more of those coins. Nowadays is even easier because you just add zeros to a machine, and that's what the central bank does, and you're forced to use that currency because you're forced to do payments in them because they're legal tender. Whereas with Bitcoin, it's very much like a voluntary payment system, and that's the same thing that applies to cryptocurrencies in general, actually. But in terms of like the technical aspects of like how payments are done and building software and applications, to kind of like conduct payments, that's some software that I was never really interested in, to be honest. And that's just more from like a technical point of view. I just was more interested in building other sorts of like applications, like financial technology related applications. And that's what's really piqued my interest into getting involved in building like smart contracts early on. Ethereum back in 2015-16, it was that whole idea about, well, you can build peer-to-peer applications, you can build group-based insurance models which haven't really been explored, you can explore different decentralized finance models. Even at the time, there was no one being able to for example, like tokenize shares, being able to lend and borrow money from other people using the smart contract as an intermediary. So these are all things that really, really interested in me. So both from like a finance angle and also from a I guess a technical angle as well.
It's true, because no matter what the aspect is that kind of grabs your attention, this is such a broad space, and you can kind of incorporate that however you'd like. You've been in the space for a while then. Austin, I'm curious about you. Would you introduce yourself and tell us a little bit about your background and how you got into crypto? Have you been in as long as Michael?
No, I haven't. And honestly, like I'm like, how do I follow that? That's such a good intro. So I got into crypto like, I guess like a lot of people in this kind of current generation in 2017. Didn't buy the top, but I bought like near the top, and I bought some tokens that I won't even mention what they are, but they were the definite like, you're super new to the space, these are the ones you buy type of tokens. And I wrote out the bear market, and I guess the thing that can be said for that is I didn't quit. I stuck with it. I got into mining, taught myself how to build some mining rigs, went way down that rabbit hole for a couple of years. Was around for the Fantom ICO, did not participate in it just because of my geolocation, and it wasn't allowed. But I was following along with kind of the Fantom journey for a little while, and when the market cratered in 2020, I don't know what it was. It was just kind of a gut feeling. I just bought. I just went in heavy. And I do want to clarify, in your tweet, you had kind of mentioned that I was, well, it sounded like you were mentioning I was part of the Fantom Foundation, which I'm not. I'm actually a community member. I do a lot of close work with them. But so fast forward a little bit, I been a community member for a long time. Something that was really neat about Fantom is we had the ability to interact with the team. Like, sorry,
I
did. I
Are you back?
apologize. I had a call come in, and I apologize. Anyhow, we
No
had the
worries.
ability to interact with the team, which I found to be super unique. And when the first multi-chain bridge opened, which was in, I believe, March of 2021, so about a year ago, I had an old Twitter account that I've been hanging on to for like years, doing absolutely nothing with. Nobody followed me, and if they did, they probably didn't remember why they did. And I just decided I was going to like start this little alerts channel. Like if you're building a new project on Fantom, you know, I'll send a tweet about you. Maybe a couple people will follow along. And it snowballed. It kind of grew into this huge endeavor where, you know, somebody came along and said, hey, why don't we start a Discord server? And then like 20 people came and started working on the Discord server, and somebody came along and said, why don't you start doing YouTube videos? And I found I was relatively comfortable on camera, and so we started doing those. And I think to date, done about 150 videos, I think. And really what it's turned into is we want to give legitimate projects that are either migrating to Fantom or building on Fantom a soft landing by introducing them to the community, giving them a platform to speak, while at the same time giving the community direct access to learn who's behind the projects and which ones they want to partake in. So that's kind of the journey of FTM alerts and how I got here.
I love that. And I want to revisit that, because once we dive into, you know, like actually thriving beyond the hype cycle, like I feel like what you're doing is going to really help Fantom in that path, you know. Mark, would you mind going next, just introducing yourself and giving us a little bit about your background and how you got into crypto?
Yeah, certainly. So my background is not from finance or you know, computer science or anything like that. I was actually a physical scientist. So my specialization is organic chemistry, or was organic chemistry. I did a lot of total synthesis projects, which is generally considered to be sort of the you know, the most challenging of chemistry disciplines, and it's mostly useless. I think it's usually just kind of used as a flex for you know, how clever you can be, and you know, how much grind work you're capable of doing. And so that was kind of you know, one of the things that I wanted to address as I was getting out of my honors degree. So for my honors at Macquarie, I was studying something called multidentate organic catalysis, which is just a fancy way of saying, you know, fancy molecules, complicated molecules that can be used to speed up reactions in other troubling you know, chemistry applications. And it was kind of, you know, a bit navel gazy, I would say. And so when I started my PhD, I decided that I wanted to combine that skill set with something that had a much more let's say real world application. And so I found my PhD supervisor, Professor Spencer Williams now, who you know, had an organic chemistry group that had a very strong sort of chemical biology leaning. And so there was a PhD student there that had just finished using something called you know, a class of molecules called glycolipids to delineate a new class of natural killer T cells, which is a really important component of the human immune system. And we thought that there was a huge amount of room there to explore sort of these, you know, this new uncategorized you know, field of immunity. And so I sort of picked up where he left off. I found a bunch of similar molecules from the Corynebacteria and Mycobacteria families of microorganisms. And most importantly, within that, the Mycobacterium species is tuberculosis, obviously. And so I found some natural products from the cell wall there, and synthesized those from scratch in round bottom flasks, which is basically the only way to get enough of these materials in a pure enough state to use them in immunology experiments. And so while they didn't, so those compounds, it turns out, had nothing to do with the natural killer T cells that we were trying to study. But at the same time, a group in Japan found a different set of immune receptors that had a very similar sort of affinity for these compounds. And so I did manage to establish a known, a novel, let's say, immune activation process for this class of small molecules with something called MINCL, or macrophage-inducible C-type lectin. And that was pretty cool, right? And so, even though I ended up completely out of, what I was trying to do, it turns out that the efforts were not wasted, which was nice. But, by the end of it, I really did feel like it was a huge amount of work, right? There was about 4 years of work for a handful of papers. And, while I do think that they were important, I still had this kind of feeling that I could be spending my time in a much higher ROI setting. By the time my PhD graduation came around, I had already picked up a postdoctoral appointment at UCI, studying under Greg Weiss. And so there I decided to do something completely different. I'd become really interested in sensing technology and nanotechnology. And what Greg Weiss had figured out was that you can use single-walled carbon nanotubes in something called a field effect transistor arrangement on the nanoscale to monitor the molecular dynamics of enzymes. And so we were looking to build the world's first single molecule DNA sequencer, which was pretty ambitious, but it was extremely exciting work, but also really punishing. And I think I was kind of back in the same boat as I was in my PhD and my honors, wondering if this is the best way I can spend my time. I did a bunch of stuff there while I was in California that sort of did come to fruition. I did design some sensors that can be used for like managing diabetes and other things. But when I came back to Australia at the end of that postdoctoral stint, I was really looking to do something more important, like something bigger, more profound, reaches more people and has more impact. And again, I guess I found myself in sort of the same spiral. I did find some funding from the German government, and I was going to spend a bunch of time in Berlin. But when coronavirus rolled around, I basically got wiped out. I wasn't able to pursue those research goals anymore. And there's, academia has a lot in common with professional athletics in the sense that you're only as good as your last season. And so when coronavirus kind of wiped out a year of research, I was really left sort of holding the bag on what was looking to be an unimpressive academic career for the last 12 months. And at that time, I had a lot of, I was still employed by the CSIRO and I was still going into work, but there wasn't a huge amount for me to do because everything that I had been doing was gearing up for this, research project in Germany, which now wasn't happening. So, with the time that I had, I started looking for other ways that I could be useful and sort of finally breaking out of this endless cycle of bouncing around between different academic projects that ultimately don't lead to anything that's ever been commercialized or only impacts a very small number of people. And I discovered DeFi, and I thought that, wow, this is actually something that seems to be important, and people are really interested in it, and I can see it being extremely transformative. And I really got the feeling that we're at that, that first break, right, of a new industry into something that is actually going to have an irreversible impact on world history. And I since spent a bunch of time exploring a lot of the different DeFi protocols, and there were a huge number that I was attracted to. But I would say sort of the ethics of Bancor, the culture and the its approach to DeFi as being something that's for the greater good, right? For the betterment of the ecosystem and not something that's attempting to extract rent or be a parasite, I guess, on top of the blockchain space. I thought was very profound. And so I attached myself to that community. I did I guess you could call it volunteer work, as all community work tends to be, and eventually caught the attention of the Bancor founders. And some of the proposals that I wrote as a community member eventually came to fruition as actual design specs and then as product offerings for the Bancor protocol. One of those was something that we called the Bancor Vortex. And it was shortly after that proposal was published that the Bancor Foundation reached out to me with a a job offer for full-time employment. And so I basically picked that up, and I've been pursuing it ever since. And I think it's the first time in my career that I feel like I'm actually doing something that is having a marked impact on the world. So it was a good change, and I'm glad that I did it.
That's a great feeling to find something that you genuinely enjoy doing, and you're making your mark and contributing in such a way. It's neat, you and Austin both said that you got your starts here, by just joining the community. It caught your attention, and it was something that you had just kind of jumped into, and that's what got you where you are. I feel like we see that more and more now as the space continues to grow. The communities continue to grow, and they become more active, and they become, a direct integrated part of that project itself.
Absolutely. I think that that's a big, and that kind of speaks to the Web3 values structure as well, that it should be community generated.
There's so much room to grow here. It's all so new, and there are so many resources that it really creates such an opportunity for so many people. Mark, I want you to kind of touch on Bancor a little bit. I feel like before thriving through the hype, you have to kind of be included in this hype. And I think that means offering something unique in this space and solving some sort of problem. What is it about Bancor? They're the original AMM, but what is Bancor, and what problem does it solve for any of our listeners that don't know?
Yeah, so I think, trying to stay on theme, I would say that Bancor, like any other project, still experiences these hype cycles. And I think in a way, our ICO was the start of that, was the peak of the first hype cycle. I think that it was a record-breaking fundraising round for that time. And so that certainly speaks to the kind of euphoric optimism that markets can have from time to time. But I do think it was warranted in a way. Like the reason it captured sort of the hearts and minds of investors at the time was because it did offer something new, right? I think that we were still sort of in the wake of the 2008 financial crisis, right? It hadn't really gone away. And so by the time the Bancor fundraiser happened, the ICO happened, I think that there were still a lot of very, incredulous, old school capitalists that felt like the financial system had let them down, and that we're starting to sort of see that the emperor has no clothes on, so to speak. And so I think with Bancor, what they saw was this idea that the financial system can be changed, right? That it can be replaced with something new. And remember, we didn't have a word for DeFi yet. This was way before any of that. We were still just talking about the idea of creating a computer program that automatically can determine the exchange rate between any two assets. And I think for the time that it felt foundational, and I think that those early ICO participants were sort of on the money, because a lot of those ideas that Bancor founded during that phase of its life have gone on to be to inspire, I would say, the rest of DeFi. And so I think it was a very positive change, and I think that it was that sense of something completely new coming from nowhere, right? That Ethereum wasn't that old yet. We had people kind of knew about smart contracts and what they could do, but no one had really experimented yet with something as potentially industrializable as the global financial sector. So I think that was the need, right? The need was, we no longer trust the world governments with with our finances, and is there a way that we can sort of bring some of that control back to the people who whose finances are being controlled, right? Can we bring back sort of themes of self-sovereignty, which I think is, again, one of the major underpinnings of Web3 values. So yeah, I think that's where it all started, and there was reason for it to be kind of hypey for the time.
Thank you, Michael. What about you? I mean, you had heard of this, you know, Fantom out of Korea, right? What what separates you from other L1s? Because there's this L1 hype cycle, but I don't feel like all L1s are included in that. And Fantom has grown so much and it has gained so much attention over the last, you know, few months or a year. What is it about Fantom that really sets it aside, apart from them?
It really has come down to the technology. So what the developers have been able to build at Fantom, you know, as I mentioned before, some of the current development team have been there from the very beginning, is that they've been able to construct a chain that processes transactions asynchronously. And what I really mean by that is that transactions that get entered in the network start getting passed between the validators to be confirmed by the network. And the network can validate transactions simultaneously rather than process them one at a time, or one block at a time, I should say. You can process multiple blocks at the same time. And that's really like the key difference from the other L1s that are out there. And in particular, like say Ethereum, which is like proof of work based, where one block gets mined at a time, and then you have to wait for further block confirmations to really make sure your transactions included. For Fantom, you can mine, you can validate multiple blocks at the same time, and you only need one block confirmation. That is, you only need to be confirmed by 2/3 of the network to be included into the network with complete certainty. And so, you know, other L1s have attempted, you know, solving scalability issues in multiple ways. You know, for example, with like Solana, there has to be an issue with Solana because the network goes down basically like every month, right? It seems like whenever there's like a project that gets a lot of attention there are too many transactions submitted to the network, it just goes down. And I think that's because there's something fundamentally wrong with the software, because an important property of all blockchains is that they have to be fault tolerant. And that means that no matter what the transaction node is on the network, no matter how many nodes in the network goes down, unless literally every single node in the network goes down, but if there's still even like one node left in the network, even if like one node goes down, two nodes go down, or three nodes go down, the network should still be able to process transactions as it were before. And it shouldn't be, you know, shut down at all, right? And, you know, there's the idea with like Avalanche, with the subnets, which is kind of an interesting idea that they're exploring, but it's very like experimental and we don't really know how it's going to work in the end. But, you know, say compared to other layer ones like Avalanche, we can do the same number of transactions as they do and have, you know, far less fees than them, right? And it's not because we're running one node. You know, the network runs 60 nodes and there are more people joining the network that I've been talking to, right? And once we get to like 100 or 200 nodes, the performance of the network, or how long it takes for a transaction to be confirmed by the network, will not go up that much because we can still process them asynchronously. There'll be more validators out there processing more transactions at the same time. And that's a key difference. Another key difference is, you know, there's a lot of talk around, you know, improvements to consensus, which are of course very important. Improvements, you know, possible layer 2 solutions to help layer 1 scale as well, which I think is an interesting area to explore as well. But a lot of things that people are not working on are on the middleware, or in other words, the performance of the execution of smart contracts. And that's why we've done a lot of research and development at universities in Yonsei University to really focus on identifying these problems and designing theoretical solutions for them. And a lot of people in the community talk about it as being like the FVM, right, or Fantom Virtual Machine, and that's definitely an important part of it. But it's not just like the Fantom Virtual Machine; it's replacing basically the entire stack in the end. Because even though the Ethereum Virtual Machine stack, so the smart contract processing engine that Fantom uses or that Ethereum uses and say Avalanche uses, you know, it definitely has a lot of merit to it because it's been around, you know, since 2014, 15. It definitely does work because, you know, thousands of applications are able to run on it quite successfully. There's still a lot of limitations, mainly down to performance and to some degree also security as well. And so what we want to do is we want to, you know, change that middleware stack by solving a lot of the problems that haven't been solved yet, and thus dramatically improve the network performance. Because in the end, it all comes down to, you know, what the users care about, user experience, and it's fast transactions, low cost transactions, and secure transactions. And there's multiple areas of tackling that. That's improvements to consensus that, of course, we're working on as well. For example, with the SnapSync upgrade that we've got coming up, deployed on the mainnet probably this week actually, or we're going to start deploying on the mainnet this week. And then there's a further upgrade that's coming imminently afterwards. That will go a long way in terms of being able for nodes to be able to sync to one another much more efficiently than they currently do. But there's also a lot of improvements that can be made on the middleware side that will end up allowing nodes to process transactions faster and more cheaply than they can currently do. So I think at the moment we've got a strong base, but there's still a lot of improvements that need to be made because there's still a lot of limitations for the network.
So I have a question then, and this might seem like a silly question, but I see a lot of talk about being EVM compatible, and you're talking about creating this Fantom virtual machine. Do you think that would hinder growth at all as far as existing protocols or projects deploying over on Fantom?
No, it shouldn't, because the aim of the new middleware stack is that it's Solidity compatible, right? Or Viper compatible as well. And that's really important because people know how to write smart contracts in, say, Solidity, right? And to some extent Viper. And even though, say, Solidity is not a great programming language at all, right? There's a lot of issues with it. It's still the most number one most popular smart contract programming language that's out there. Anyone who knows how to develop on Ethereum would know how to develop with Solidity, right? And so that's actually one of the reasons why we chose to be Solidity compatible, or one of the reasons we chose to be Solidity compatible right out of the box. Because when we had finally developed this consensus engine, we wanted to get users, obviously. And the easiest way to get new users was to kind of appeal to the Ethereum users that are out there. And so, by connecting to the EVM like we did back in the end of 2019, one, it's something that kind of like works out of the box to some extent. And number two, it also allowed us to appeal to all those Ethereum developers. So kind of like our pitch to this day is, if you're on Ethereum, you know how to develop smart contracts on Ethereum, you can do the same thing on Fantom, but take advantage of a different consensus engine. And so it's very important that the new middleware that we develop is Solidity compatible, because that would mean that from a developer point of view, if they wanted to launch applications on Fantom and they knew how to do it on Ethereum, they would be able to do it pretty much the same way as on Fantom, but just running different commands. Like instead of, for example, like running a command to compile your code to an instruction set that's able to be interpreted by the EVM, you can compile your code and have it interpreted in a different instruction set by, like, say, the Fantom virtual machine. And so the architecture underlying would be completely different, but from a developer's point of view, from a smart contract developer's point of view, it would be pretty much the same. Because usability is very important.
Oh, not just for sure. Mark, I'm curious, he's talking about from a developer's standpoint and point of view, what's your point of view? Do you agree with that?
Yeah, mostly. I think that, because Ethereum is still sort of the de facto smart contract blockchain, and I'm not saying that it will be forever. I'm not speculating on anything like that. I'm just saying that, because it was, I think, the first blockchain with smart contract support, it makes sense that that its preferred programming language would become sort of the one that was accepted by the industry as being, the standard. And I think that that's what Michael's talking about when he says that, Solidity, for all of its faults, is probably going to be here to stay forever. And even though it is potentially a flawed language, it's still good enough, right? Like we still get a lot done on it. And so I think maintaining, support for Solidity when we're talking about blockchain development, especially competitors to Ethereum, it is important to observe that industry standard. But I don't think that it is necessarily the case that we should assume that Solidity will continue to be the default smart contract language forever. I think that there are better alternatives. We've seen things like Rust have become much more popular over the last couple of years, and even I think blockchains like Cardano have a multi-language support, or at least are aspiring for multi-language support. And I think that things like Haskell are the default programming language for it. So yeah, look, from a developer's perspective, I would say that, or even from a project perspective, I don't think that it's the case that that EVM compatibility or Solidity compatibility is as important as the rest of the the blockchain user base thinks it is. It certainly makes it more convenient. That there are certainly more Solidity developers than probably any other type of smart contract language. But I don't think that it is necessary. We've said recently, that to the Bancor community, that when they're considering which other blockchains that Bancor should deploy on, that it is not a requirement that it be EVM compatible, or that it accepts Solidity as a smart contract language. The good developers will know how to program in a large number of these. Certainly within Bancor, we can do Solidity and Rust and other things without too much trouble. But yeah, I think that it would be silly for a new blockchain ecosystem to not support Solidity, just because that's the majority, the majority of what smart contracts are written on. It's kind of like, launching a web app and not, in an environment that doesn't support JavaScript or something like that. It just doesn't make a lot of sense.
So speaking of, projects going onto Fantom, right? Let's say, so you offer this technology that you were just talking about, and it's attractive, and users want to go over there. It's fast, it's inexpensive. You're permissionless, right? So how do you attract new projects that are going to be quality like your blockchain is? Because I feel like that is going to be a huge factor in actually like thriving beyond the hype cycle, also, is actually offering these quality products, these quality projects on your blockchain for the users. Is there a way that you can even go ahead?
Yeah, I mean, like a lot. So, like, kind of like the objective of the foundation of my job is like helping grow and support the Fantom ecosystem as much as possible. And there's kind of like two parts to it. So one is working first and foremost on the technology. So the core team of developers working on the consensus improvements, working on the middleware improvements, and also to some extent working on RPC improvements that are coming along as well. But the other part of it has to do with the growth in the community. So at the foundation, we have a lot of inbound leads. We try and help people deploy on Fantom by providing them technical support, answering any questions that they may have at a technical level. Also providing like marketing support, so all the usual social media stuff plus some PR if it's possible. And also there's like the Fantom incentive program that's been like redone to make it like more efficient than it currently is. But also like a big part of it is a lot of it just comes down to the community. So I think like what differentiates us as a community versus say other communities and other layer ones is that we haven't paid anyone to join the Fantom network. We haven't spend heaps of money acquiring users or acquiring developers or acquiring applications or anything like that. A lot of what we have right now is just simply organic, because there's people in the community that have found Fantom and have decided, hey, I want to experiment with Fantom. I want to see how it works, how my application works, how transactions work, and then they can see, oh wow, like it does appear to be quite fast and quite cheap compared to like other alternatives out there, and quite stable. The network just basically never goes down. And it's been there's some really prominent Fantom community members, and one of them is on the call right now, like Austin from FTM Alerts, who have really played a big role in helping grow the community by just reaching out there, getting a lot of traction, telling people basically about Fantom and the applications on Fantom, and really just helping turbocharge community growth. Fantom Foundation hasn't paid Austin to talk about us, right? Like we didn't find Austin and say work for us, right? Like Austin just came to us from the community, from the crypto ecosystem, and found us and thought it was interesting to talk about Fantom, and that's just kind of like amazing to see. And I really am thankful to the community that we have, that it's organic, that they kind of just found us and really like kind of support like the Fantom community as a whole, and also what we're doing at the foundation.
Yeah, I think that's a really important point, by the way, just for everyone listening, that there's this word that gets thrown around in DeFi quite frequently, which is like mercenary capital, and I think that we've often forgot it. It's become such a mainstay term that we stop thinking about what it means. But in a way, it means unloyal, right? The kinds of communities that you get by paying them to be with you aren't necessarily as strong as the ones that are there out of their own volition. And I think that this is one of the things that Fantom has going for it in a very profound way, is that its growth has been one of a slow at first but consistent following, followed by that kind of growth that you see when an ecosystem is getting established. And so I agree with Michael 100% that it feels much more organic, and I think that that kind of slow growth, at least in the start, is kind of how you build a steady foundation of loyal users, and that's a huge plus.
Austin, do you feel like you felt this steady growth? I feel like being, FTM alerts, all of a sudden was it steady for you also, or did it all just kind of come at once? I mean, being on that end of it, being in the community and as involved as you are.
Very good question. So one thing I want to mention is that, I definitely want to give a shout out to Mike and Simone and the others at the Fantom Foundation, because they had a vision early on how they wanted this network to accelerate. And, using the word organic growth to a community where a week feels like a year doesn't always land very well. And especially not when we saw other incentive programs going out there, not like the developer incentive program, but more like, Polygon had a big one and AVAX had a big one. And I know that it was a little bit difficult for the community to get on board with that, but flash forward to where we are now, I think everyone realizes that we've attracted the right quality talent to the network, where they have this Fantom first type of mentality, in that we want to see the network do well, and as such, when we build on it, we should have success along with that. And it's kind of one of those weird self-fulfilling prophecies, that the more opportunities there are on the network, the more attractive it becomes for more people to come build on it. And so, like, for me, it was, I kind of just tripped into all of this. Like, didn't really know what I was doing, didn't really plan for any of this to go this way. But all of a sudden, it did become like a slingshot. And I would say, and we had the Fantom Developer Conference back in October of last year. And I would say a month or two prior to that is when it really, really accelerated. And then past that point, it's just been nonstop. My calendar, unfortunately, to anyone that wants to book on it, but it's booked 2 months in advance at this point, just with new projects that are coming to Fantom, and it's very, very fast. And to your point earlier, the thing that really sticks out to me, and the thing that like keeps me doing this, the tech stack is amazing, and I will probably never be the one to talk about that because I'm not a developer, and I'd be completely remiss if I tried to use a lot of those words. But I've had a lot of opportunity to interact online and in person with the team behind Fantom, with Mike and Simone and John Morris and the others, and Sam. And I really just fell in love with the people that are behind the network. And, for me, that's what I'm doing every day. I'm interacting with the developers. I'm looking in their face. I'm seeing the months that they spent on building their dApps, and watching them find success. And so for me, the big pull, the thing that motivates me and gets me out of bed in the morning to want to continue to do this, is the people. And that's one thing that I can unequivocally say, in Fantom, we have really, really good people at the community level, at the developer level, and at the foundation level.
That's great. You guys have mentioned Avalanche a few times. Would you consider them your biggest competitor? Do you even consider them a competitor? Mark has spoken about competitors of Bancor a few times, and he's kind of almost said like they're necessary to the growth of the space, and you each offer something different. What's your take on that, as far as other L1s that are kind of in this hype cycle with you?
Kind of yes and no, because we are definitely we are definitely in competition with other like layer ones out there, because we want to be the best, we want to be the biggest, of course, and that's the same with other layer ones out there, which is not a bad thing, because in that sense it's kind of a race to the top. It's about who can go to the community the most, and who can get the best technology out there that can process transactions faster, cheaper, and more securely. But at the same time, I do really think that the future is going to be multi-chain, and I think we've kind of already seen that at the moment. Where it's not going to be 10 or 20, chains that are out there, but it's going to be maybe 3, 4, or 5, right? And definitely for Fantom, we want to be part of that category, of course, and we want to be leading it. Right now it's quite easy to switch between chains, and people use multiple chains. People usually don't just use one chain, whether it's just Fantom or just Ethereum or just Avalanche. They use multiple chains, and that's because it's quite easy to switch between them. Thanks to kind of two things. And one is like the bridges that we have, so people can move assets between one chain to another and back and forth like with relative ease. And even though there are some potential security implications, there are some risks there, and some downsides, it is something that does currently work, and I think will improve over time with better technology. And the other reason is that there are applications that hold or connect to multiple chains, and so from the user point of view, being able to switch between chains is quite easy. So, for example, like with MetaMask, as I'm sure like many of the people in the call know, you can put in the chain ID, say for Fantom, and then you can switch from Ethereum to Fantom to other chains to back, just with like a couple of clicks of a button, right? And so then you can interact directly with the networks, and so I think that sort of that sort of development will just keep continuing in the future. It will be easier to switch between chains more so than it is now, and it will just be a few chains that are out there that many people use, depending on what sort of applications and opportunities exist on a particular chain versus another, depending on whether it's DeFi related or NFT related or something else.
We've spoken about bridges quite a bit in the past. Is there a bridge that's native to Fantom?
So like Fantom itself doesn't like really run any bridges. But like the bridge that's the most popular right now that's being used is called the multi-chain or the AnySwap bridge. So this is like a team that's been around for a few years now. They originally with Fusion, and they developed the AnySwap technology using sort of the technology that came from Fusion, and so that is probably the biggest chain for Fantom at the moment. I think they have like billions of dollars of assets that have been bridged back and forth between the chains. So that's the most popular one, but there's also like a number of other bridges out there. For example, like the Ren bridge and just a number of others as well that you can kind of see on our Fantom.Foundation website.
So when you're building, right, do you look at other blockchains in the past, like other L1s, and kind of think like, this is where they went wrong, this is what we want to do? I mean, what's your inspiration when you're actually building out Fantom?
Yeah, definitely. I mean, so when originally Fantom was nothing, because it had a very bad start, we had to kind of like explore ideas from scratch. And a lot of it came with reading what other projects were doing, like Avalanche and Solana were around back then, although it was like early, of course, very early days for them, and other projects too. And we also investigated different papers related to existing blockchain technologies, or just like papers on distributed computing itself. And so yeah, we're constantly looking at what other people are doing and kind of evaluating, is that the best approach or not? Because for us, it's not really about like ideology about like, oh, we want to be ABFT just because we want to be ABFT. We're very practical in that we just want the best solution that achieves what we want to achieve, which is the three things that I talked about before. Fast, cheap, and secure transactions. And so if there's open source technology there that works, that adds benefit to the ecosystem, we'll 100% like look into it and might use it as well. I mean, that's essentially what we've done so far with, say, the EVM, right? We took the EVM that's open source, we connected it to our consensus engine that we had to build from scratch, and now we have like a platform that's like working, right? And there's a lot of like growth opportunities there in terms of technology. So we're very pragmatic. We kind of like look at other things, look at all things. And so what we're currently doing is looking at what other L1s are doing, looking at particular technical solutions, whether than on the middleware side of things, or for example, with like flat storage, like how do you get a key value pair, data structure operational, which would work in all circumstances. Currently, how the MPT currently works, how you retrieve and submit data via the EVM at the moment, and also on consensus. Starting to look into ideas around sharding, starting to look. We looked into ideas about like how to do like snap sync, how to do rapid syncing, how to do auto pruning, and so we look at what other people have done and think about, okay, how can we do it better, and how can we get it to work with our blockchain.
So actually, I want to follow that up just quickly. I think that the ambition to have fast, cheap, and secure transactions is a really good one, and I think that having that as sort of a a core value for a blockchain, especially Fantom, I think is great. But I don't think it's unique. Like I think that if you look if we look around at some of the competitors within the blockchain space, and that we've already recognized in this call that there's probably too many blockchains, and they probably aren't all going to be successful. Maybe they all will. I think we don't know yet which one's going to be successful. But we've got Fantom, Avalanche, Solana. I would consider Polygon to be a layer 1, even though it likes to call itself a layer 2. Harmony One, Tezos, Cardano. And I would say if we had calls for all of these layer 1s, that some version of fast, cheap, and secure transactions would be somewhere in their elevator pitch. I'm just wondering, we all sort of know that being fast, cheap, and secure probably isn't enough to be the best, but I also don't think that necessarily that technological innovation is enough either. I'm wondering what you think the secret sauce is to being a successful blockchain. And, it's been just really terrific to watch something like, to watch Fantom sort of rise above some of that, layer 1 noise and become something that actually has sort of a bona fide community and starts to generate its own culture and momentum. But I'm wondering where you think that comes from, right? Is it something that you did early on, or is it, key people that you just have to get lucky to find, or, the right projects that have to get launched? Like, what do you think it is on top of fast, cheap, and secure transactions that make, Fantom a successful blockchain, against other blockchains that are also fast, cheap, and secure?
I think it really comes down to the asynchronous technology that we've developed, and we did get a bit lucky in terms of like hiring the right people early on, because it's very hard to hire these sorts of people that really have that particular like niche knowledge, right? And because what we have right now with the current chain is that we have a system where we can process transactions simultaneously, and it definitely is like permissionless, and it definitely is decentralized in the sense that we can just keep adding nodes to the network, and it's leaderless, meaning that there's no like ranking of nodes, there's no like central coordinator, say for example like what IOTX has, and it doesn't kind of like use any gimmicks or anything like that. It's just like technology that pretty much works in like all like public settings. And there are some other L1s that are out there that kind of like masquerade as like, oh, we're kind of like permissionless and decentralized, and anybody from the community can like really use us. But in reality, it's just like a few validators processing those transactions, and that's the reality for some of them. And so and for example, like with Solana, it's gone down quite often. So there's definitely like some sort of consensus issues there, or fault tolerance issues there that do need to be solved. Whereas like Fantom, it just basically like never goes down. That's 100% uptime.
I agree with you, by the way. Sorry, yeah, I didn't mean to interrupt. Go ahead.
Yeah, and also like you're right in the sense that there's a lot of competition around layer 1s, and so the ways we're trying to differentiate ourselves is also focusing on other scalability issues that perhaps other chains aren't really focusing on, and that in particular for us is heavily investing in working on the middleware, in improving the execution of smart contracts across nodes. Now, this isn't like really related to consensus. I mean, it sort of is, but not really. But it's still like a big bottleneck where we've experienced on our chain, and same with others, and they've also identified sort of the same issues. I mean, Avalanche have talked about the same sort of issues. So if you use the EVM, your transaction throughput goes down by more than 90%. And we've seen that with the Fantom network, where we can process like a ton of transactions if they're just account to account transfers. You remove the EVM, but once you add the EVM in there, it's significantly slower. And it has to do with like a lot of technical issues, in particular, like how you read and write data on chain, how you execute like certain opcodes in the EVM, shall we say. And so we want to like work on those issues, because if we can, work in solving those issues, and fortunately, in order to like kind of like have improvements, it's not like you got to wait 5 years and then you have like, one significant improvement or it doesn't work. It's like, it's incremental improvements over time, where you just switch out one component after the other and you already get significant improvements. So, that's sort of like the plan right now. And I think that's one way that could differentiate us compared to the other layer ones out there. We really executed it well. Now it's tough. It's going to be hard. But I think we have the right people coming on board right now to really tackle those problems, who have a lot of experience in working precisely on these issues.
Yeah, I think I think you hit the nail on the head when you said that you need the right people, and that, if Fantom didn't have the right people at the start, then that, would have made, developing the technology more difficult. But one of the other things that you remarked on is something that I want to draw attention to again, which is that decentralization component, and how important that is to a blockchain, I think, in future-proofing itself against everything that is likely to happen over the next few years. Coming back to the theme of this call is like, thriving beyond these hype cycles. One of the things that I did notice during, the bull run of last year is that I think that the market sort of forgot about that decentralization narrative a lot, right? And they kind of forgot their roots as to, why decentralization is important. I started to see more and more, let's say, decentralization skeptics sort of rise with very loud voices on crypto Twitter, especially. And it was, at the time, I would say, a compelling argument. We did see very highly centralized blockchains, such as BSC, such as Solana, become very popular. And I just wanted to know if you noticed the same thing, and if you were, worried as I was that the Web3 community was kind of forgetting itself.
Yeah,
that's that famous trilemma. Sorry, the trilemma that everybody speaks about, with decentralization. Go ahead, Michael. Sorry.
Yeah, so I definitely agree with that. And talking about the blockchain trilemma, this is why scaling blockchains is very difficult, right? And this is why, with the current technology, we can't support as many users as the internet. But I think if we solve these technology problems, the blockchains will become as big as the internet. I see no reason fundamentally why that can't be the case. So I'm definitely very bullish on blockchain technologies as a whole. That being said, though, it is still quite early days, and there's still a lot of improvements to be made. And I hope Fantom is the one that can be making those improvements. But yeah, for sure. I mean, there's been a lot of hype around like layer ones, definitely in particular, like last year, Fantom included. And I think a lot of that comes down to the price of Ethereum went up a lot. Ethereum popularity grew drastically, but because the network isn't very scalable, the fees went up, significantly higher, to hundreds of dollars per transaction, or even on a few occasions, it was thousands of dollars to execute a single smart contract transaction. And I think that's the primary thing that attracted people to use these alternative layer ones, where they can perform the sort of transactions you see on Ethereum, like DeFi related or NFT related, but do it paying far less than they were for Ethereum. And I think when that happened, generally with hype, a lot of people don't really think, do like due diligence and like really think about like things like super in depth. There's a lot of trend that we see, not just in crypto, but just in general in the world. People following what other people do, what the majority of people do, and that kind of what builds like hypes, in certain technologies or certain industries around the world. And I think, people didn't really really understand like how the underlying technologies work. How, for example, like Solana and Avalanche and Fantom are all like very, very different from one another. And so I think kind of what my objective is to kind of like illustrate without much technical language, like what the differences are and like what Fantom is trying to achieve and how really Fantom works. So this week or next week, I prepare kind of like a general like outline as to like how Fantom works with like a few analogies that are out there to kind of like make it easier for like non-technical people to kind of like really understand what is it about Fantom that makes it different, say, from Ethereum and others. Like what is it that allows us to process transactions with more throughput without getting into all the nuances of the technical details, because then you just like lose people, and the people we want to have in the end are not just technical users. We want to have like users that are both technical and non-technical, just like with the internet, how obviously the vast majority of users who use the internet non-technical. You can't expect them to have an understanding of like how Google works or how internet TCP/IP works or anything like that, but they do know how to open a browser, how to enter search queries, how to use applications on the front end, and that's exactly where we should be for blockchains as well.
I have a question kind of building off of Mark's as far as the decentralization. Mark, do you guys, either of you, your opinion on it, think that these centralized exchange or these centralized blockchains that are existing right now, do you think that they will thrive beyond the hype cycle? Or do you think it's going to come back to the core of decentralized?
Well, I think that so can you hear me, by the way? My phone is, I'm getting a weird feedback from Twitter.
No, we can hear you.
Yeah, can hear you. Yeah.
Nice. Okay, so I think that it's going to be there are some purpose-built blockchains that are very very centralized, but that I think are serving such a specific use case that they are almost guaranteed to survive, because no other blockchain is really able to compete with them right now. I think as the regulatory and legal landscape develops over the next year or so, that we will actually start to see some more of these, very specific, very gated, permissioned, and centralized blockchains become more prominent. And we haven't heard, in general, when I have conversations with community members, they aren't even really aware that there are these sort of commercial blockchains being built that are used for like one thing or just a handful of different tasks. I do think that there are going to be I think that those kinds of blockchains, they're not going to die, but I think that in a sense that they're also not going to be very important. I think it's just a new way of doing stuff, right? I think that if the immutable nature of blockchains is important, then it's totally fine for there to be sort of private, guarded deployments of them. And so it's not a necessity that decentralization be innate to a blockchain. But having said that, I do think that all of the public blockchains, that they absolutely need to be decentralized. Anything where you can attract any user, no matter who they are, and anything that has to do with sort of like I said before, that self-sovereignty axiom of Web3, decentralization is absolutely critical. But no, I think that we will have centralized and decentralized blockchains, and that they will have their own specific use cases. And that's fine. I don't think that it's necessary for one blockchain or one handful of blockchains to rule everything. Just like everything else in our society, that there are going to be private clubs and other things that service the needs of special groups. And that's okay. I don't think that we need to be frightened of that. But what does frighten me is centralized blockchains masquerading as public blockchains, and I don't think that's acceptable.
Michael, do you have a take on that?
By the way, I think I need to go in about like 5 minutes. Apologies for that. Kind of my take on it is that, I do definitely agree with what like Mark said last thing, that blockchains that are very much like centralized, even like in some cases by design, but say that they're decentralized and they're trying to achieve the aim, that is generally like sprouted in the community about like, oh, we want to have decentralized open source like network, kind of like the internet. I mean, that's definitely important. I mean, at the same time, I do think like decentralization, to me, decentralization is like is kind of like a bit of like an over like used term, right? Because a lot of people say like, oh, we need decentralization. Well, the first question to ask is like, how much decentralization is enough decentralization, right? And there's no hard and fast rule. Is it 100 nodes? Is it 150 nodes? Is it 200 nodes? Is it a certain level of distribution of hashing power across like n number of machines or organizations? Is a certain distribution of like tokens amongst like n number of like participants or individuals in the community. There's no like specific right or wrong answer here. A lot of it comes down to people's like own personal perspectives and kind of like own philosophical perspectives. And so, one of the important things to note about decentralization is that, there generally is like a tendency towards centralization, even like an open source network, no matter what it tends to be, right? So, just take Bitcoin for an example. A lot of people say, well, Bitcoin is like very decentralized. That's why it's like such a great form of money because it has all that security. Well, it does have a lot of security because a lot of people are, participating in proof of work and they've added in, the computing power to confirm transactions on chain. But at the same time, though, there's economies of scale related to mining, because in order to run a profitable mining operation, the more economies of scale you have, the more money you're going to make. It's just as simple as that. The more computers you can buy in bulk, the more like hardware space you can get, the more your fixed costs go down on average, the more bulk electricity you can buy. And so, with economies of scale comes a degree of centralization, which is why, you don't see like everybody in the world, running their own Bitcoin node, right? You see, a number of providers with a lot of capital, hundreds of millions of dollars or billions of dollars, running like thousands of machines. They're the ones that are really validating the network. So it is like theoretically possible for, a group of those big miners to kind of like collude together and then, basically like double spend or, do some sort of like, changes on the network that a lot of people will consider malicious. That being said, what's also important is not just the level is like centralization versus decentralization, but also like the whole economics around how do you incentivize actors to act well on chain and kind of provide for the users on chain. And so there's a lot of game theory around it, right? So for example, like with proof of work, a lot of people invest money in those machines. If they were to start performing malicious transactions on the network, that would obviously bring down the chain value. And it's like, well, if you spend money on hardware specifically, to target that chain, and the chain value goes down, then the chain that you're mining in terms of the tokens that you earn, your investment is kind of going to waste, right? So there's an economic disincentive to kind of be malicious. And there's the same sort of concept with proof of stake. If you were to attack a proof of stake network, you have to buy a lot of tokens, you have to collude, and then that would probably lose a lot of confidence in the proof of stake chain that you're staking in. And then, you'll probably lose like a ton of money doing that. And so, I mean, that's what's also important. It's kind of two things about decentralization. One, what is the level of decentralization that the community really wants in the end as a whole? And number two, also about what's more important is the economics of incentivizing what's known as good behavior on chain, or economic incentives where people want to make sure that transactions on network kind of operate freely and there's no kind of manipulation going on.
Thank you so much. I know that you mentioned that you had to go, and I apologize to our listeners that didn't get a chance to ask their questions. But if you have to run, I completely understand and respect that. Do you guys have any last thoughts in addition to, our discussion?
I could probably answer a few questions now. I mean, I could probably have about 5 minutes to do it. Sorry.
No, don't be sorry. I've got 2 requested. So we'll take these 2 questions. I'm going to throw you guys both up on stage here with us, up on the floor. Oh, okay, I've got one.
Hello, this is Murat from Turkey. First of all, I want to tell you that Turkey is the best crypto trader in European Union. I want to tell you to Michael that all Turkish people are disappointed about the last situation of Fantom coin because it really fall down very, very hard. So all people disappointed here after Andre has gone. We believe that Michael will show his power, and to gain people trust, we are waiting big word from Michael.
Yeah, thanks for that. Yeah, so if I just kind of comment on like, the situation that kind of unfolded a few days ago. Like Anton put out a tweet that, unfortunately was not accurate, right? So it kind of implied that like, Andre and Anton would be terminating 25 projects, and then they would just, be dead, right? And I even got people messaging me saying, "Oh my gosh, like is Fantom going to be turned off now?" And either put out the clarifying tweet, and same with the foundation, and same with the other projects out there. They're like, no, there's a whole team behind the foundation, and just dispelling a lot of misinformation out there. So like people were saying that, oh, Andre built the Fantom technology, that he's a core developer. That's actually not true. Like Andre was never a core developer on Fantom. The people that built the existing Fantom technology and the chain and platform you see today are a team of developers, some of whom have been with us for like years now. They're the ones that like really built it. And like what Andre's contribution was helping me kind of like find these developers and like basically build the team and give them some ideas to kind of for them to explore. But they basically took that for the past few years and have kind of built the chain that we see today. So, and it's the same unfortunate thing that happened with a lot of these other projects. People thought that multi-chain was going to be turned off, even though multi-chain has its own developers for years now, have been running independently for years now. The same thing with Yearn since August 2020. So, and all of the worry that came out there, which was like, I think a very knee-jerk reaction to, Anton's like unfortunate, like one tweet that came out, it's just simply not the case. So no, like Fantom is not disappearing. No one individual can turn off the chain. It's simply not possible. There's a lot of people in the community. You would have to convince the majority of the community if you wanted to turn off the chain. So no, it's not going away anywhere. And it's the same thing with these other projects that Andre and Anton were working on. And like what Anton really meant about terminating was in some of these projects, they've been running user interfaces for them. So not the smart contracts, but just the user interfaces. And they were basically just handing over the user interfaces to the existing teams. And they were not running any Fantom Foundation applications or technology at all. Zero. So there was no handover for Fantom because it just simply didn't need to happen.
Yeah, I want to speak just quickly to this as a general concept, but you can kind of tell the strength of any of these projects, right? I consider Fantom to be a project onto itself. It's only strong enough to gain your trust if it can weather the departure of any individual. As Michael has said, I don't think that I don't think anyone who had known anything about it would have considered Andre to be a key contributor to the actual technology side of things. But still, he was a prominent personality and a huge influencer and obviously an important part of the Fantom culture. But you should see this with a sort of a silver lining that if Fantom's success was contingent on Andre's involvement, then that would be a bad thing. You don't want the momentum of any project to be contingent on the influence of a single person. And I don't think that anyone that is familiar with the Fantom ecosystem would even think that. So I think that it was, it's just another one of these drama cycles. There will be more. And not just for Fantom, but for our project as well, and for Ethereum, and for every major project, there's always going to be some drama that is made a mountain out of, that makes people's confidence get shaken. But at the end of the day, how big of an impact really is it going to have? In my opinion, the departure of Andre Cronje, while tragic, is not is not critical. I think that everything will continue business as usual.
thank you guys so much for speaking on that. I know that it's been a big thing, the last few days, and I know everyone was curious about it, so I appreciate that. Michael, I know that you have to run. I've got 2 more that requested. If possible, my DMs are open. Maybe they can go ahead and direct them to me.
Yeah, I kind of move things around, so I can answer more questions if you want.
Okay, perfect. You know what, then I'll go ahead and James, if you want to go ahead and ask your question, Michael's made himself available.
Hi, guys. Can you hear me?
Yes,
Yeah,
we can.
Perfect. Thank you very much for taking the time, and this is great. I'm somewhat new to crypto, and apologies if this has already been covered, but Michael, this is a question for you then, and it's somewhat broad in scope, but my question is, how do you think about the current landscape of scaling solutions as it relates to L1s, L2s? Obviously, there's a lot of conflicting opinions online, and would just love to get your take on how an investor should think about the competitive landscape, whether that's decentralization, speed to finality, cost, scaling new users, etc. Thank you.
Yeah, that's a great question. I mean, there are a lot of technology scaling solutions that are kind of being worked on. So we just talk about consensus itself, or like the layers, right? So with like layer 1, like obviously Fantom has this idea around asynchronous processing of transactions, but that only gets you so far, because that doesn't like really solve the blockchain trilemma. And what scalability really comes down to in the long run is this whole idea about the blockchain trilemma, that there's a trade-off, between like decentralization, between security, and between like scalability or / availability, right? And it's kind of this idea that you can only really optimize for 2 of them with the current technology. You have to forego like a third one, right? And so, for example, like if you run like a single database, obviously you don't have decentralization, but you can have like a lot of scalability, because you just have to process all transactions on a single computer, and you can have a lot of security as well, because you just have to like one computer, where there's probably not going to be issues with like talking to other computers, because no other like computers to talk to, right? But then there's a trade-off in decentralization, and then you can go the other ways, right? Other ways as well. And so kind of like the holy grail is like, how do you like find sort of like a clever method to kind of getting around the blockchain trilemma, right? Where you can kind of scale infinitely, and you can kind of achieve all 3 in a way. And so that's what all these ideas about like that are being explored on layer 1s is like all about, right? And so from like Fantom, processing transaction asynchronously kind of optimizes the trade-off, but it doesn't solve it. And so ideas, for example, like sharding, that like Ethereum is exploring, that we're starting to look at as well, is one like interesting idea that theoretically could work, where you basically break up the computation. You keep bringing up the computation across like multiple validators. So instead of like having validators or nodes having to process all transactions all the time, you only have a subset of those nodes having to process the transactions, but you design a system in such a way that it's still secure, that that those nodes are not going to be able to kind of manipulate the data and send it to the other nodes in the network. And there's also the idea about like layer 2 solutions as well. So the number of like layer 2 solutions that have been deployed on Ethereum, that to me, there's still trade-offs there, because we're like, say, Lightning Network for Bitcoin, all these like layer 2 solutions with Ethereum. The big trade-off there comes down to like decentralization, right? Because if you're not having the entire network validating all the transactions or activity that goes on in layer 2, then that in itself is like a vulnerable point, right? So that's something that would still need to be solved for if you wanted to achieve like a good level of decentralization for like layer 2 solutions, right? But kind of like the important thing and the good news is that like a lot of these technologies, are kind of experimental. So we'll kind of see in the end, what really works and what doesn't work. And so there's like a lot of innovation development taking up happening in the space, and it happens regardless of the market conditions. So for example, in 2018, a lot of people are surprised when I told them this. There were actually more transactions done on Ethereum than in 2017. Yet the price of Ethereum like went down by like 80%. And why is that? Well, it's because there's long-term growth, and people see it as a real technology that they want to use. And so every single year, you have more people using blockchain technology. You have more developments happening. Some of the technology works, some of it doesn't, but that's just the process of creative destruction. So, in the long run, I'm very, very bullish on blockchain technologies. I see no reason why it shouldn't be much more widely adopted than it already is.
Mm-hmm. And just one follow-up question there. If you're thinking 5-10 years out, do you kind of envision a broad swath of communities with different chains? I kind of get, a rising tide lifts all boats, and there's market growth, that's sufficient for everyone. But is this trilemma problem something that you actually see as solvable? Is there room for multiple blockchains to coexist, or is it a technology issue where once that's solved, then there's going to be a gorilla in the room?
Yeah, I do think that it's likely that this blockchain terminal, will be quote unquote solved, or there'll be kind of a way around it. But I do think, as I kind of explained like earlier in the conversation, I think the future will still be multi-chain, but it won't be like that many chains that are out there.
Got it. Thank you.
Hi guys, maybe I take the chance. This is Tim speaking from Dubai. Michael, first of all, thank you for everything you're doing for Fantom, of course, and for our community. Could I ask you, what's your take on something very specific, maybe too specific for this round, but what's your take on Harry and Tom Finance, may I ask? Are such initiatives helping Fantom even on the long term to succeed? Or is this maybe like something like a Ponzi scheme? So I would just be interested. Maybe you have a position feedback on Harry and Tom Finance. Thank you.
Yeah, well, like Harry's definitely been like one of the big community supporters from Fantom. To be honest, I kind of didn't expect it. It's kind of like been a bit strange and interesting. He's kind of a bit of an unusual figure, but he has definitely supported us greatly. F1 sponsorship, of course, for AlphaTauri and the Fantom Developer Conference, which was like an amazing event that happened in October. So he's definitely done a lot for the Fantom community and really put his money where his mouth is, so to speak. But on the subject of Tomb Finance, I think Tomb Finance, if it wants to be sustainable in the long run, it's got to be able to modify the algorithmic stablecoin model. And because we don't have much time, but basically the T-bonds issue, there needs to be more incentives for people to buy T-bonds when it's below peg to kind of push it up towards peg, in my opinion. And once you find a good method of doing that, it should help to kind of stabilize Tomb being pegged to Fantom. And then also, that kind of would help solve the stable issue. And then it's also about use cases, right? So how can it be used across the different ecosystem? How can it be used, in general, for people, this discussion around utility. My understanding is he does have some ideas around it, but it'll be interesting to see if is he able to explore them and achieve them in the end. But in the end, if Tomb is to be sustainable, the model kind of needs to be modified, and also there needs to be more use cases added to it.
I think that I just want to add to that really quickly. So the Tomb Finance model is a near carbon copy of a previous project that and that previous project, despite having most of the operating in almost precisely the same way that Tomb Finance does, that it previously failed. And we've seen, a very large number of these effectively uncollateralized stablecoin projects, rise up in popularity and then fall over. I do think that one day someone is going to, work it out. I don't think that we should, write off any project that attempts this. And I don't think that we should categorize them all as Ponzi schemes either. I think that they have a noble goal. And that that if it's realized, it's going to be huge. But just know that it's extremely risky, and be careful with what you're doing there. History suggests that Tomb Finance is going to become unstable eventually. But so far so good. There's no I don't want to say that it is destined to fail, but it absolutely could, and so you should be very careful with it.
Yeah, I mean, like, just to kind of like add on to that, you know, in general, like, there's a lot of like stuff happening in the blockchain space, right? And it's all kind of like unique and stuff that people have never seen before, right? With all these sorts of like DeFi, NFT applications, you know, it seems like, you know, it's been around for a while, but it's only been around for like literally like 1 or 2 years, right? Because the space moves so fast. But because the space moves so fast and there's so much people doing stuff, you know, it means that stuff ultimately is kind of experimental. You know, the underlying technology is experimental, and these sorts of applications are experimental. And you know, will some of them succeed? I think so, and very very big. And I think we've already kind of like seen some of them succeed. You know, just to kind of take one example, like Curve, for example, or like, you know, Ethereum and other chains. You know, it's continue to exist with $1 billion worth of funds in them, and it's been like pretty stable. So I would consider that to be a success so far. But there's still a lot of experimentation going on. Experimentation means like, yes, there's the ability to, you know, achieve much, but there's also risk as well.
Timbo, I hope that answered your question. I have one from the community that was DM'd to me. Michael, do you DeFi, and is it strictly on Fantom?
I'm sorry, what was that? Can you repeat that?
Do you DeFi, and is it strictly on Fantom?
Oh, do I DeFi? Yeah, I do. But I'm not like an active trader or anything like that. I'm pretty much passive, so I don't really have to, you know, think about it that much. I can, you know, just do my job, which is at Fantom. But yeah, I do DeFi stuff on mainly Ethereum and Fantom.
Cool. I think with that, we'll call it a day. Thank you guys both so much, and thank you to Austin. He had to end the call a little bit early, but I want to thank him as well, even though he's not here. I appreciate the three of you guys so much, and appreciate the listeners for joining us today. It's been a great conversation, and I wish you all the best with everything that's going on right now, Michael. It looks like Fantom will continue to thrive. Mark, thank you, and I will talk to you all soon.
Thank you so much, Jen.
Thanks a lot, Jen. Really appreciate it. See ya.
Thank you, guys. You all have a good one.
Thanks for attending. See ya.